Hello everyone, this is Group 2, and today we are going to present our financial analysis project on two corporations, Costco and BJ's Wholesale Club. In this presentation, we are going to discuss the most recent financial report years, which are 2020 and 2021. In this report, we are first going to describe what these companies are, and give a little introduction to each one to better understand their numbers. Next, we will go over their income statements, balance sheets, and cash flow statements. We will compare and contrast the two companies to find which company we think would be a better investment. Lastly, we will detail which company would be our choice and why. To provide a little background, both of these corporations are part of the warehouse club operator family and provide different level memberships to their customers in order to buy goods at a discounted price. Costco was founded by James Seigel and Jeffrey Broadham and opened its first store in 1983. It is widely known for its low prices on a wide selection of top quality products, while also providing excellent customer service. BJ's Wholesale Club was first founded by Mervyn D. White and his daughter, and they first opened their store in 1984. Just like Costco, BJ's is known for outstanding prices, but it exclusively operates on the East Coast. To put their savings into perspective, they advertise that their model achieves consistently 25% or more, which in their eyes is superb in contrast to traditional supermarket competitors. Three important items on the income statement for both companies are revenue, cost of goods, and net income. When examining Costco, their revenue has increased each year from $152.7 billion in 2020 to $166.7 billion in 2021, which indicates that they had somewhat of an improvement in performance. Through our analysis, we also discovered that the cost of goods sold also increased from $125 billion in 2020 to $137.3 billion in 2021, suggesting that there is a sizable decrease in profitability. Nonetheless, Costco's net income surprisingly rose from $4 billion in 2020 to $4.9 billion in 2021. This shows that they have a very stable financial performance. For BJ's Wholesale Club, their revenue has also increased from $13.7 billion in 2020 to $15.5 billion in 2021, showing an improvement in their financial performance. We have also noticed that their cost of goods has risen as well, from $11.9 billion in 2020 to $13.4 billion in 2021, potentially affecting their profitability as a result. Additionally, BJ's net income has decreased from $208.4 million in 2020 to $205.7 million in 2021, indicating a deteriorating financial performance. And on this slide, we can visualize the comparison for both Costco and BJ's income by utilizing this bar graph. On this slide, the three main items we investigated in relation to the balance sheet consisted of total assets, total liabilities, and total equities of these two companies. From 2020 to 2021, Costco's total assets increased by $7.6 billion by originally starting at $52.9 billion and then capping out at $60.5 billion. Costco also saw a $4.9 billion increase in their total liabilities as it went from $31.8 billion in 2020 to $36.7 billion in 2021. Lastly, total equity also increased by $2.7 billion, having $2.1 billion in total equity in 2020 and $23.8 billion in 2021. For their competitor, BJ also saw an increase of $0.5 billion in their total assets when it jumped from $5.7 billion in 2020 to $6.2 billion in 2021. Their total liabilities and total equity also jumped from a year-to-year basis. In 2020, BJ's had a $4.4 billion in total liabilities. In 2021, it had a $4.9 billion, leading to another increase of $0.5 billion. Its total equity went from $1.2 billion in 2020 to $1.3 billion in 2021 to create a smaller $0.1 billion increase. And on this slide, we see a comparison of each corporation and their balance sheet ranging from 2020 to 2021. As you can see, the numbers and bar graphs show that Costco is clearly doing better overall. Costco's two largest investing activities for the most recent year were purchases of property, equipment, and acquisitions of businesses. Their two largest financing activities were the issuance of long-term debt and the repurchase of common stock. Overall, we agree with Costco's investing and financing strategies, as they are investing in long-term assets to support their growth while also returning value to shareholders through stock repurchases. For BJ's Wholesale Club, their two largest investing activities were purchases of property, equipment, and acquisitions of assets from related parties. Their two largest financing activities were the repayment of long-term debt and the issuance of long-term debt. Overall, we also agree with BJ's investing and financing strategies, as they are investing in long-term assets and managing their debt obligations. Slide 14. In this section, we would be taking a look at both Costco and BJ's cash flow statements. For Costco, in the year 2020, operating cash flow was at $9.9 billion. Their investing cash flow was at $3.4 billion, and their financing cash flow at $5.1 billion. In 2021, the operating cash flow increased by $6.3 billion from $9.9 to $16.2 billion. The investing cash flow also increased by $2.1 billion to $5.5 billion, and the financing cash flow increased by $4.8 billion to $9.9 billion. This represents that Costco has been strong in its ability to adapt and generate cash from its core business operations to cover expenditures, payments, and other forms of obligations. Furthermore, the increase in the cash flow, especially by such a large amount, has shown growth in the company. For BJ's Wholesale in 2020, their operating cash flow was $825.9 million. Their investing cash flow was $429.6 million, and their financing cash flow was $438.8 million. These all dropped in 2021. The operating cash flow dropped $204.1 million to $621.8 million. The investing cash flow dropped from $102.7 million to $326.9 million, and the financing cash flow dropped $16.4 million to $422.4 million. This is a lot more negative than Costco because it shows that the company has had a decline in ability to generate cash in their business operations. The cash flow has weakened from a year-to-year basis. Two items not included in the financial statements that could be important for investors are a company's social responsibility initiatives, such as environmental sustainability and community outreach, which can impact their reputation and long-term viability. A positive corporate culture can also contribute to a company's success by promoting employee morale and productivity. These factors can influence investor sentiment and may impact the company's financial performance. With this slide here, we can interpret a visual representation of Costco and BJ's operating, investing, and financing cash flows. In this section, we will discuss why Costco is the best choice to invest in. Furthermore, there are many ratios that are helpful to consider when evaluating companies. First, the asset to debt ratio, which measures a company's ability to pay off its debts. A high ratio shows that a company has more assets to cover its debt. Costco's 2020 ratio was 7.05. The 2021 ratio was 6.23, so it had a slight decrease. BJ's in 2020 was a 1.3, and in 2021 it was 1.6. This also decreased slightly because Costco had a much higher number overall. A company's current ratio shows its ability to pay back its short-term debts and is calculated by dividing its current assets and current liabilities. In 2020, Costco ratio was 1.85, and in 2021 it was 1.86. This shows it was stable. For BJ's, it was 1.38 in 2020, and in 2021 it was 1.43. Both were positive and stable. But the slight increase in BJ's is a very positive sign for investors. Return on equity shows profitability based on the amount of money invested by shareholders. Higher ratios typically show greater profit. Costco had a 0.19 in 2020 and a 0.21 in 2021, showing a slight increase. BJ's had a 0.17 in 2020 and a 0.16 in 2021, showing a slight decrease. Overall, Costco barely edged them out with a better return on equity. Return on assets measure a company's profitability and efficiency based on total assets. Costco had a 0.075 in 2020 and 0.081 in 2021, showing a slight increase. BJ's had a 0.037 in 2020 and 0.033 in 2021, showing a slight decrease. Once again, Costco shows a better return on asset ratio. Lastly, the inventory turnover ratio measures efficiency in managing inventory, and a higher ratio means inventory is both sold more quickly. Costco had a 7.91 in 2020 and 8.58 in 2021, showing increase. BJ's had a 4.08 in 2020 and a 4.14 in 2021, showing increase. Both were positive, but Costco beats them out in this ratio due to having better numbers. In summary, Costco has generally shown positive performance across all ratios, indicating efficient use of its assets and profitability. On the other hand, BJ's Wholesale Club showed a mixed performance with positive signs in the asset to debt ratio and inventory turnover ratio, but a decline in return on equity and return on assets. However, it's important to consider that industry norms and compare the ratios to other companies in the same industry for a more comprehensive analysis. Investors should consider these ratios along with other financial metrics and industry trends to make informed investment decisions. If our group were to make a decision to invest in one of these companies, it would have to be Costco. While both companies have shown improvement in their financial performance, Costco has demonstrated stronger financial stability with consistent revenue growth and increasing net income. Costco has also shown positive performance in just about every ratio, specifically in their asset and profitability. On the other hand, BJ seemed to have more mixed results. They have positive assets to debt ratios and inventory turnover ratios, but their return on assets and equity showed decline. Additionally, Costco had a reputation for being a socially responsible company and promoting a positive corporate culture, which many contribute to their long-term success. Overall, Costco's financial performance, coupled with their commitment to social responsibility and positive corporate culture, makes them an attractive investment option. And on this slide, you can see the sources which we utilized for this presentation. And that's everything. Thank you for watching this presentation. We hope you found it enlightening.